Welcome back to Investing with Confidence. I am your host, Joshua David. Always having a great time on this great Memorial Day weekend. If you happen to miss 2 tickets for the investing class, call 952-814-4410. You can also register for this class by going to learnwithota.com. Al, I want to continue this discussion about this headline news. What are we seeing out there? Articles and internet and TV and news and all that stuff that's happening. And a lot of the things that they say is a little bit different than
Right,
what's
right.
happening in the financial markets. And there's a reason they do that. So let's talk about some of that headline news, what's been going on, what's going on with some of these stocks that had these headline news, and how do us as the average investor use that to our benefit?
Yeah, well, first of all, maybe we shouldn't put so much emphasis on the news because sometimes the news that we get is too late to really act on it for the greatest benefit. Sometimes the news can be uh, structured in a way that has the public basically doing what some of the pros want us to do so they can basically take the other side of a trade.
Yeah.
And they control the majority of the trade. So if they're buying, they have to find someone to sell. They're probably not going to find another pro that's going to sell at high prices when or buy at high prices when they're selling at high prices. So who do they find? They find the public. So oftentimes we end up doing the opposite of what we should do because we're kind of, in a way, tricked into doing something. Uh, what's been happening, what's been working actually has been buying the dip, and that's been working for a number of years. But what if by the time the dip takes place, and by dip, we're talking not about someone's personality, we're talking
Oh, I
about
thought I was confused there for a
thought we were
second.
talking about you again.
I know. One more time.
A retraction. I mean, stocks don't go up continuously or down continuously. They kind of move in stair-step movements. But typically, when you have a pullback in something, what has been working is that you buy that pullback. That's the dip. But what if you could identify the dip before it happens? Because what typically happens is human beings, we're followers. We follow this kind of herding effect where we wait until we see something happening before we jump in. For the most part, we don't like to be the first person to make a move. We want some confirmation of
Confirmation.
something. So if you could identify where that dip was going to stop dipping, turn around and go back up again, and you could already be positioned, then when the herd comes in and starts buying, they're actually providing a profit for you. That's what our strategy is designed to do. It basically is kind of identifying those dips or turns in the in price of any asset or the markets in general. But you have to be able to do that as soon as possible, ideally before it happens, so you can participate in the majority of the run. Typically, what happens when the stock changes directions, it starts to trend in one way or another. Those trends always end. So ideally, you would be able to identify the beginning of a trend and the end of a trend. That would get you in at the lowest risk point and out with the highest profit. That's the goal. To be able to do that, you have to understand what causes those turning points, who causes them, and just be able to do exactly what they're doing. That's what a timing mechanism does. That's what our students use. It's a core strategy, foundational strategy that really is designed to basically follow what is causing price to change.
And just to give an example on that too, I mean, Nvidia had earnings this week, and
Hmm.
if you look back in April of 2021, the price was at about $650 per share.
Right.
When Al's talking about what institutions are doing or what the smart money is doing, they're buying the dip. Price actually went down to about 540, roughly about 540, the dip,
Right.
and then it's up back about 16% up to the earnings point on, I believe that was on Thursday.
You're correct.
Well, price actually went down on Thursday after stellar earnings, but here's the kicker. It actually went back up to the highs from April 16th. Now, that could be a miscommunication as well. With the stellar earnings, it went down, but now it's back up to an area where it potentially could drop again. You don't know.
Yeah, well, and typically what happens when you're talking about earnings, and by the way, there's a great strategy or strategies that you can use to take advantage of earnings, especially with stock like Nvidia or Tesla or Apple that have big moves. But this is the fact is that the greatest volatility takes place right up to earnings, maybe the day of earnings. That's when the greatest volatility is there. But if you look at what happened with Nvidia, that when their earnings came out after the market, the stock went down. The following Friday, the stock went back up. It had a fantastic day, but the move up, that move up in price right up to the day of earnings, you could go back and you could see, using our strategy, you could see areas, what we call them zones, a demand zone or buy zone, where that had happened before. But if the institutions, the pros, were buying before the earnings, maybe they knew something that the public didn't know.
Hmm.
So would you be better off? Would you be better off buying the news or selling the news, or buying and selling based on what the institutions or the pros are doing, who probably know something that we don't know?
And that's a great point too, because most novice investors or public investors are buying because of the news after moves in price, after things happen. And if you need to know, I mean, it's all about a price chart, finding areas of buyers and sellers where the institutions are doing that. It's important to ride along with them. So we have a lot of listeners that want to understand more about buying actually off of facts, which is a price chart. So I want to give away some tickets to an investing class and invite you to this class that Al teaches here at the Academy, and he gets into more on why the news is saying certain things for the public to do in their investment accounts, the reasons, but also how we can eliminate those emotions and make decisions based off of facts. If you want to learn more about that, call in right now for 2 tickets for this investing class. I'm going to also give away the Financial Quick Start Kit. So when you call in right now, make sure to mention the Financial Quick Start Kit. You'll receive that when you attend. 952-814-4410. That's 952-814-4410. Al, with some other stocks, let's start with Ford.
Okay.
Okay. Now, Ford had the RBC actually upgraded
Right.
Ford. This was on Thursday. Now, to give some context to this, Ford was down to, well, I mean, if we want to go back further, down to roughly about $4 a share at the beginning of March of last year, but it is up now roughly about 290% from then.
Mm-hmm.
Now, think about that. Ford is already up 290%, and now the RBC is upgrading that.
Correct.
Why are they so late?
But yeah, they raised their price target to $17. And this happens oftentimes. The analysts that are covering something often will wait until either good news or bad news has impacted the price of something, and then they will come out and change their opinion, change their price target, for example. But Ford went from $4 up to, you said it's around $15.
$14.50 as of Friday.
Okay, so why did that happen? Well, it happened because somebody that had a lot of money knew something about Ford and took positions when it was in that single digit area and drove the price up. There's a couple of strategies that are used by hedge funds and by the pros out there. One is called pump and dump. What that means is that they will do something to pump up the price of something because they want to sell it. Hedge funds, for example, they'll sometimes put maybe $5 million or more into a position to drive the price up, again, getting the herd to come in, drive that price up because they want to sell it. That's pump and dump. Well, there's another one, the opposite of that, and I think
don't know if I want to hear that
hopefully
one.
I can say this on air. Get ready with the bleep button. It's poop and scoop. And that is where they will drive the price down because they want to buy it. And that happens on a regular basis. If you have millions or tens of millions or hundreds of millions of dollars to utilize in the market, you have the clout to do that. So those are things that either you are taken advantage of by, or you can take advantage of them. If you know how the markets function, you know what some of these strategies are, and then you are able to benefit by just following what these guys are doing. Instead of trying to fight them, compete against them, which you can't, by the way, join them. Just basically do the same thing they're doing. And that's what, Online Trading Academy put a lot of time and effort into putting this strategy together, where they are able to, with a high degree of accuracy, identify where that smart money activity is going to take place before it does. When we're talking about Ford, one of the reasons that Ford did go up so high, and why it probably is something to pay attention to, is that they are heavily into the electric vehicle market, and the two hottest markets right now, cryptocurrencies and electric vehicles. Ford has said that by the year 2022, they will have exceeded Tesla in volume of sales of electric vehicles. In addition to that, what's probably one of the hottest, coolest vehicles that's on the road right now?
That's not my vehicle, is it?
Which is, well, yours is pretty hot too.
SUV.
Yeah, no, it's a Ford F-150.
It's Ford F-150,
right?
and they're always the top seller too.
Yeah. What if they had an electric Ford F-150? How great would that be?
That's going to be pretty awesome.
Well, they just announced it. They
There you go.
have an electric F-150. So yeah, there's a lot of potential there. But again, it doesn't make any difference how much potential a company has or how great a product is. Unless somebody is buying it, price will not go up. Unless somebody's selling it, price won't go down. So that's the key. It is being able to identify the appropriate entry for anything that you buy and the appropriate exit. And by that, I mean, what's the profit potential? What's your target? And how do you identify a target? Most people have no idea, and that's one of the mistakes they make. They buy something, have no idea when to sell. You sell when you identify where there are a large number of sellers that are going to turn the price back against you.
Yeah,
and that's when you want to get out.
Yeah, really the moral of the story is it doesn't matter what we hear. It doesn't matter what
Correct.
we read, because what does that create? Creates an opinion.
Mm-hmm.
And everybody has an opinion. That's why you need to base your decisions, especially in your investment accounts, off of facts, where the buyers could potentially be, but also where the sellers could potentially be. And that's what our strategy is designed to do, is potentially find where those are and then ride along with them. So I want to invite you to an investing class to show you more about, which Al is talking about, supply and demand, how that works in the financial markets, how to make decisions in the financial markets with more confidence. So callers 1 through 10, when you call in right now, you're going to receive 2 tickets for an investing class, plus the financial quick start kit. That will help you get started right away. Call 952-814-4410. That's 952-814-4410. Al, coming up next, I want to dive into 401ks, IRAs, the different types, and the best ones we should use based off of our age. 952-814-4410. We will be right back.